Mr. Brandon Monroe, how are you, sir?
Pretty well, Matt. There's been a lot happening this week.
Really? I didn't spot anything. Are you sure? What's caught your eye?
Sarcasm so well. How are you?
Thank you. All good here. It's been raining for 3 weeks, waiting for summer to turn up. In the meantime, I entertain myself by reading the uranium news. Geopolitics continues to surprise and delight. So, shall we talk about North Africa?
Exactly. Really tragic situation unfolding there for the Nigerians. Now, interestingly, there seems to be, and of course, for people who haven't followed it, we're talking about the military coup that's taken place in the West African ECOWAS nation of Niger, not to be confused with Nigeria. Different countries bordering, but nonetheless different. And there's been a coup there just in the last week. And it seems to have a lot of public support, interestingly. It's not too good if you're a government minister because you've been rounded up and arrested, and the democratically elected president is under effective house arrest in the presidential palace, and it has many of those typical ingredients of a coup. However, it's certainly showing the signs of being more than temporary, and it's got a number of signs that could indicate an escalation. And all of those point to really desperate situations for the Nigerian people, who are already one of the poorest nations in the world. So there's a lot to be unhappy about in West Africa at the moment because of that situation.
Well, absolutely. And I think, look, I want to point this out. And I think I mentioned another conversation I had earlier in the week. Perhaps I got my number slightly wrong there. Is the fact there have been over 200 recorded coups in Africa since the 1950s. That's a lot. And normally it kind of signals a sort of transition of government. It's not to say it's not necessarily anti-democratic, because it usually, it's a transfer from, one kind of failed state to another failed state in many cases. But this one has a kind of slightly sinister undertone, I would argue. The Wagner Group have been operating in the region for a few years now, unopposed, and forming allies. And I think there's definitely the fingerprint of the Wagner Group on this. And, and that in the context and backdrop of the Russia-Africa conference last week in St. Petersburg. Do you think that sort of changes this narrative at the moment? Will this fall into the category of it's like all other African coups, and we'll kind of, I guess, go back to some sense of normality, albeit with a slightly different head of state, or is there more to it?
Look, I think it's a really good point that you raised. Now, obviously, there's a lot that we don't know, and there's a lot that we're guessing about, and there's a lot that we're supposing. But based on what appears to be the reality on the ground and our own interpretations of the geopolitics surrounding this event, I would say that it is different to many of these African situations. As you say, many of the coups in Africa they kind of fit into an almost benevolent category, because it might be a dictator who has an election, refuses to hand over power, military comes in, and they basically operate a true transitional government, allowing for either the new leader to come in or some sort of a new process. And then you get another set of coups that are dressed up that way and have this very transient nature about them. This seems to have some more permanent ingredients, as we've seen in neighbours Mali and Burkina Faso. And there's a lot at stake here, and there's a lot of reasons to believe that there's a greater involvement from the Wagner Group and potentially the Russian state as well. And that's what makes it a lot more sinister, as you say, Matt. It doesn't, whilst the pretext might be they're unhappy with the security situation and they're unhappy with the economic situation, it looks more like a grab for power to reframe the regional power stakes in the area, in that ECOWAS Sahel region of Africa.
Yeah, it's kind of interesting, because it was already, I think, perhaps struggling with the sort of overlay of this kind of Islamic militancy in West Africa. We saw Mali and I guess Burkina Faso as well. Having to deal with that, and you have obviously within Niger's case, a lot of it's a big contributor towards the French uranium and nuclear energy program. They have had a big presence in there, and it feels like the kind of sentiment from this new military leadership is we are anti-France. We're declaring French language, or we're removing the French language from. We are going to potentially ban all movement of uranium, which benefits France. So there's that going on. You kind of got the Islamic component in terms of that Western Sahel and the security issues around that. It's getting complicated. I don't think anyone's got the answers, and we'll have to see how this thing plays out. But these are big questions that need to be answered and possibly addressed. And I'm intrigued to see how France reacts. I'm intrigued to see how does other Western nations back France up? Do they back France up? And of course, there's a big sort of U.S. military base in the middle of Niger too. So how does that play against what's going on as well? So it's interesting times there for sure.
Well, that's right. And France is facing a very difficult decision here. Do they stay and enforce and support militarily the democratically elected president who's under arrest at the moment? That's a commitment that's not a simple several-week exercise. The situation is that Burkina Faso and Mali's ruling military governments have both said that they will support Niger if there's any foreign intervention, either by the ECOWAS alliance, which is primarily Nigeria to the country's south, or from other actors, which is clearly a reference to France. So that's a protracted campaign that they would need to be prepared to engage in. That, of course, distracts from their capacity to support the Western efforts in Ukraine, and perhaps that's part of Russian calculus. What it's also likely to do is unleash a new wave of immigration into Europe that'll have a destabilizing effect on Europe, which is probably also part of the Russian calculus. The US, they'd be reluctant to get involved. They've got a doctrine of not being involved in more than 2 conflicts of war at any one point in time. And if they were to get drawn into the Sahel region in any official capacity, then that reduces their capacity to react to a Taiwanese situation. So I would expect that they won't want to get involved, and they've been very careful not to use words like coup. They're tiptoeing quite carefully now for various domestic reasons to do with provision of aid and so forth. But, like all of these situations, the real victims on the ground are the Nigerian people. The ECOWAS alliance has already declared a range of biting sanctions. There's nothing going in or out of Niger. Niger is a landlocked country. It's a desperately poor country. Medicine's not getting in, food's not getting in, other provisions are not getting in. They will run out of energy very soon. So it's a desperate situation. And on top of that, ECOWAS has declared that they will use force if necessary if the rapidly expiring 7-day ultimatum for a return of civilian power doesn't occur, and we're not seeing any indications that will be observed. So it's looking like a very serious standoff in that area, where you've got potentially 3 countries, 2 of which have already got a substantial Wagner presence, securing their own internal security, and Nigeria backed by other ECOWAS alliance countries, and potentially with a role from France. It's a highly volatile situation, and I think the opportunity for it to resolve quickly has already passed. Now, of course, we're all hoping for a quick resolution, and I'd love it, Matt, if we come back the next time on air and there has been a resolution. But unfortunately, I'm not very positive about that at all.
Yeah, for sure. I mean, I say for the Nigerian people, we hope there's a quick resolution, because they're the ones that are actually affected on the ground, while this kind of power grab plays out, and the international community works out how it reacts, if it reacts, and when it reacts. I actually got called by a journalist yesterday discussed this, and I kind of quite bizarrely had to point something out to them, which was he was talking about the effect of this coup on African uranium, or rather Africa as a uranium producer and provider globally. And I think that's a reminder that Africa is a continent, not a country, which I think he failed to recognize. So this is we're talking about Niger here, not Nigeria, but we're also talking about Niger, not Africa. I think you'd definitely be keen to point that out. Where are you? How far away are you from this situation? Remind us, Dan.
I think it's about 4,500 kilometers between Namibia and Niger.
Right.
It's a totally different part of Africa. It's totally distinct in terms of the geopolitical alliances and the military and treaty alliances, the trading partners. Namibia's in an Anglophone part of Africa. Niger's in a Francophone part of Africa. So it's thoroughly different. There is a land bridge connecting the two of about 4,500 kilometers, and apart from that, they could be separate continents. That's the reality of it. Now, what's interesting, though, is that you always wonder, well, is there any knock-on effects? And I was asked that question on Twitter yesterday, and I went to the main masthead in Namibia, which is aptly called the Namibian, and I had a look at their front page, and I couldn't find anything on the coup. So there's less news in the Namibian sphere than there is on the BBC or Al Jazeera or even the ABC that we're looking at in Australia here. So it really is in a very different part of the world as far as Namibia is concerned.
Yeah.
And they're just very different countries. You know, Namibia's never had a coup. It's not even thinkable. The military is totally disconnected and distinct from the government. There's a proper rule of law. It'd be as unimaginable as a coup in New Zealand, quite frankly. Now, that's very different for a dynamic country like Niger. It gained independence in 1960. This will be the fifth successful coup that they've had, and they've had 7 unsuccessful coups as well. So we're talking about a very different tolerance, a very different role that the military plays in society. Most of the time I go to Namibia, I don't even see a soldier. And I mean that, like, you see police and you see other things that you see in a normal country. But if you see someone in fatigues, it's like, oh, there's a soldier. That's interesting. It's a very, very different place. So there's absolutely contagion. And if anything, the only link between Niger and Namibia is it probably positions Namibia's uranium industry better because it's known by the players in this market as being a very reliable source of uranium that doesn't carry any of that security or political risk.
Right. Okay. And I don't necessarily want to space of pick one or the other here. I think we want all of this to kind of resolve because we need all of this uranium. We really, really do. And I think the French would agree. So hopefully it gets resolved. But it does put a kind of question mark on timing of the for companies like obviously Global Atomic and GoviEx, obviously in country, it's less than ideal for them, especially for Global Atomic, because they are in the process of looking at debt solution for their capex at the moment. This is this, I guess, the second occasion where perhaps the timing hasn't worked from the first time was eco warriors getting in the way to slow things down there, came back on track. And I think now this, as an ex-banker, I've been in this situation where there's been a coup in Africa when we're kind of mid-transaction, and we've had to look down tools basically and see how it played out, because there's no way a bank, certainly not a debt provider, is going to walk into a situation like this until this is resolved. So we want this resolved as quickly as possible, and as in Global want this resolved as quickly as possible, positively as well, so that they can get on with the business of raising the capital. In the meantime, obviously, shareholders nervous. I think the stock is down by 50% over the last week, since the 25th. That is, I guess, unfortunate, but one of the realities of running a mining company. So we wish them well. We want it to work out. Let's see what happens. And maybe next week we'll be having a different conversation. Who knows? We better skip on because we've got a lot to cover this week because we didn't catch up last week. So why don't we go to think more positive news, and we'll go to winner of the week. Who are you allocating that to?
Onto a positive tone. So it's a tie this week between China, who have just approved another 6 nuclear reactor construction starts. That's after they approved 10 during calendar 2022. So we would expect that their target is 10 per year. So we've probably got some more good news coming for the rest of this year as well. And the other one, which for a very different set of reasons, are the folks at Georgia Power who have finally connected the Vogtle Nuclear Reactor 3 to the grid. So China, I think it's obvious, they're getting on with it. What's fascinating is they're shortening the construction time. They're now targeting between 4 and 5 years to complete a nuclear reactor, a large-scale, gigawatt-scale nuclear reactor. They've been building them consistently at about 5 years, about 60 months on average. That's very distinct from the experience that we've had at Vogtle. And what's really fascinating is their estimate on the cost of these 6 nuclear power reactors is about $2.79 billion US per reactor. So let's take that into an economics frame. They're building at a installed capital per kilowatt hour of capacity of under $3,000 US. Now, Matt, if you go back to some of the earlier discussions we had a few years ago, you'd remember that we were talking about China wanting to get under $3,000 per kilowatt hour installed capacity. And what that does is that gives them an absolute advantage in the export market compared with what the South Koreans are managing to do, which is closer to $5,000 to $6,000 US per kilowatt hour. The Russians are doing it at about, depending on where it is, about $5,000 a kilowatt hour. And then you've got Western examples, which, Hinkley see 6 to 7, depending on what pound US exchange rate you use. And then you've got the outliers, which is what the anti-nuke crowd absolutely love, like Olkiluoto in 3 in Finland, and of course Vogtle here. So very clear as to why the Chinese are the winners. Why the Vogtle team are the winners is they stuck with it. They got backing that goes all the way back to Senator Perry when he was the Secretary of Energy under the Trump administration. They made the call not to abandon, but to take a view on the need to finish another AP1000 in the US and to build the first AP1000 or the first new reactor in the US in about 30 years. It's been very expensive. It's had extensive delays. It's the stuff that dreams are made of for the anti-nuclear crowd, because they can now cherry pick this, ignore all of the cheap and fast reactors built in China and say, ta-da, it's too expensive. However, what it's done is it's enabled the US to stay in the game. It's enabled the US to maintain its nuclear industry. One of the main reasons why this project was delayed is because Westinghouse went broke right in the middle of it. Now, of course, Westinghouse is owned half by Brookfield Renewables and half by Cameco, and it's going from strength to strength to strength. Now, unless you've got a domestic nuclear power industry, you can't be an export player. And unless you're an export player, the US cannot temper the influence that Russia and now China are having in the global energy infrastructure game. There's a big picture here. It's a geopolitical picture, and I think they're a very worthy winner, joint winner, by tie with China for this week, because they stuck with it and they've finally got to the finishing line.
It's a very, very interesting addition to the conversation around return on capital invested and baseload energy and where this puts that whole conversation in relation to some of the news coming out with regards to wind turbines and solar panels and recycling issues and the reality of the cost minus subsidies. So again, I suspect we talked about it before. We'll talk about it again. But very, very interesting news indeed. And my favourite, bungle of the week. Who's getting that?
Well, in a very neat segue from your earlier comments, Matt, bungle of the week, I'm going to award it to all the hapless folk who said with a great degree of authority over the last several years that renewables will continue getting cheaper, just like computer chips. And it was a mantra. It was presented as scientific fact. And it was challenged at the time, and we said, no. And gee, I can't tell you how many times you and I have said it on this show on the public record, but we said you cannot apply Moore's law to renewables because they require natural resources. And sooner or later, if you try and dig up too many natural resources compared to what supply there is, prices will go up. And we were held down. And of course, science and renewable dogma don't always go hand in hand like they should. And what's happened? Well, we've now got wind turbine prices up by about 40%, which is, bang on what we predicted. So the bungle of the week goes to not only the lobbyists who managed to very skillfully weave in this narrative without any real challenge, but it also goes to all of those policymakers who fell hook, line and sinker for that in their decision-making. Now, who's left carrying the can? Well, it's in many cases the contractors who have agreed and committed to build these projects. And so the very recent news is that we're seeing Vattenfall and Ørsted abandoning two different projects, offshore wind projects, because of a 40% cost escalation. There's a number of other examples where Siemens, for example, have just undertaken an extended technical review, as they call it, because of these significantly higher costs that are predicted to be about 40%. Now, in an infrastructure project, that is an acute increase. And, quite rightfully, people might look at our comments and say, well, aren't you throwing stones from your glass house in the resources sector? Because we've talked a lot about cost inflation, and there's many a project in the mineral sector at the moment that's gone up by 40%. But the difference is an infrastructure project is supposed to be locked down. You're supposed to have a very, very, very good line of sight to your cost and your revenue over a long period of time. And that's the whole basis, as you know well, Matt, for the finance that then goes into an infrastructure project. And if you're talking about intermittent renewables, it's also the basis for all of the subsidies that get poured into those projects. So this is disastrous. It's catastrophic. And it's a shame, because viewed accurately with the right amount of questioning and the right amount of debate, we need all of these renewable sources. We need offshore wind still. We need solar. We just need them in the right balance with the other forms of energy. And instead, what's happening is we've got market distortions that are resulting in wind projects being built where they really shouldn't be, and that's raising the prices for wind projects that probably should be built and should be feeding into the grid, and in many cases that's offshore. So it's a collective bungle to a whole lot of people who've been involved in the artificial inflation of expectations from the very real and very positive contribution that intermittent renewables can play into a balanced grid, through to this expectation that we can all live off 100% renewables, with a sprinkling of unicorn dust and, the energy you get from rainbows.
Well, well said. Look, it just stuns me that you talk about this sort of slightly deluded expectation of what problem it can solve, but the kind of counter to that is obviously it suggests a huge reduction in the logic applied to this, and that's when government needs to kind of step up and do its job properly. It's meant to be there to kind of set the tone and maybe help with some incentives to deliver cheaper energy for its populace. That's the point. Okay, it's for the benefit of the people. That's why you're elected. That's what your job here. But when they're kind of pushing companies into a slightly, again, like I say, slightly deluded energy supply and transition phase, which is not well thought through. I've got a couple of friends who, advise governments, including the French government, UK government, on the energy trade, and they're pulling their hair out because it seems to be all for profit, all for headlines, and not joined up thinking. And I'm having to try and get one of them on the show to kind of explain what a good return on capital invested is for investors, but what is a good return on government's money for its people in the context of energy. Nuclear, he says, has to be a significant part of that, cornerstone of that, the long-term certainty. So anyway, one for another day. You can tell I get frustrated by this stuff when politicians get involved because they are unthinking in the worst possible way. Right. Okay, here's a question for you. I like this one. Because I think it is good. So, so Kazatomprom sales have gone up 13%. Why? What does it mean for Kazatomprom and the wider market?
Good question. So, Kazatomprom had their quarterly results this week, and there's always a lot of really interesting stuff that I'd encourage everyone to read. But what you're referring to, Matt, is they've increased their sales forecast for this year by 13%. And you might say, gee, well, they're doing a good job. But it's not that they're selling 13% more. It's that their customers are saying, we'll take 13% more under the existing sale contracts and the sales arrangements. It's known in the industry as flex. And what that really means is most of the uranium is still sold under long-term contracts in our sector. And those contracts, they're reasonably complicated commercial arrangements where a certain volume of uranium is committed by the supplier to the buyer, from the mining company to the utility buyer of that uranium. Now, the utility has the option to either take a little bit less or a little bit more, and that's flex. Typically, it's negotiated on a case-by-case basis, but typically in our sector, that flex is about 20% down and about 20% up. So here's what's happened across our sector over the last 10 years in the bear market that started after 2011. The contracts that were written before Fukushima ended up being substantially higher prices than what utilities could achieve in the spot market. So there was a time, TEPCO, for example, called force majeure on some Cameco contracts, where the average price of those contracts was $112.50 a pound. And at that stage, uranium was trading at under $25 a pound. So that gives you an example, quite a stark example of where these contracts were very high compared to what the utilities could buy. So, of course, they took as little as they could possibly get away with, and they used all of that flex to reduce the amount of their purchase obligations under these contracts. And so, of course, the miners like Cameco, like Kazatomprom, they did all of their planning and all of their sales funnel planning on the basis that, the utilities, they'd probably take a bit less than the target amount, but, we'll flex a little bit there. So all of a sudden, we've had this situation where spot's come into the market. It's absorbed all of the excess inventory in this sector. The spot price has gone up, and some of those contractual terms look really good compared to what utilities could achieve in the spot market. And not only that, but the utilities don't want to buy in the spot market because they don't want to push the price up in competition with spot and other natural market buyers. So they want to get as much as they possibly can out of their contracts by utilizing the positive flex. Here's the rub. Remember I said that those miners, they got trained on expecting that the flex would be on the downside. So they lined up their contractual commitments with a negative view of how much of that volume would be called for under the contract. Now we've got an abrupt flip the other way. So in simple terms, you could say that all of a sudden they're oversold by about 20%. So when Kazatomprom says its sales are up by 13%, what it's really saying is it's oversold by 13% at a time when they're experiencing difficulties getting their product out of Kazakhstan because of Russian sanctions and difficulties operating shipping lines out of St. Petersburg, constraints on the Trans-Caspian route, and at a time when it's pretty well known in the sector that Kazatomprom is buying in the spot market anyway. They've admitted it themselves that they need to. Cameco is in a similar situation. So this is a really interesting dynamic in this sector, and it's an example of one of the several very important virtuous cycles that switched so sharply from a bear market to a bull market. The other one's secondary supply. When there's a whole lot of excess inventory, when everyone just assumes that they can get uranium really easily in the spot market, the utilities don't think they need very much inventory, and they're more likely to sell because they're getting pressure from their finance department to use their balance sheet. You know, why are we carrying all this uranium? You're telling us that it's everywhere. Suddenly the excess inventory is gone. There's a heightened anxiety about whether the supply is even there. You get a coup in Niger, which is responsible, as we discussed, for 5% of the world's uranium. And not only do the utilities stop selling their excess inventory, but they suddenly think, well, maybe 2 years isn't enough. Maybe we need 2.5 years of inventory. We'd better start buying, and they buy competitively. So that's another example of these cycles that can reverse very abruptly in our sector. Again, the swing from a bear market to a bull market is very dynamic in the uranium sector, and that's one of the factors that makes it attractive to investors, and one of the reasons why fund managers, retail investors, and even generalist investors are starting to understand that this is a sector, as it switches from a bear market to a bull market, that you really need to keep your eyes on. It does have the potential for some very interesting financial gains as an investor.
Well, yeah, and I think in a few minutes, I'd like to talk about some knock-on effects there. So I'm wondering what influence Niger has on Kazatomprom in terms of how they view this, where they look. Because we talked a few weeks ago about, obviously, say China reaching out and trying to buy up and mop up all the deals that they can for uranium globally. Kazatomprom obviously closely linked with Russia, Chinese conversations. It's I think people's expectation is that most of Kazatomprom's product will head east. Niger, which is 5% of the market, potential with huge disruptions there. I mean, what does this do in the minds of a utility going, crikey, I've been running this close to the wire for the last few years. We are running down our own inventories at our various sites or within our fleet. You're hearing news that like this from Kazatomprom. How does a buyer react to this? What do you think they're now thinking? Perhaps they're a little bit more nervous.
So here's the really fascinating thing for investors right now, Lat. The average fuel buyer right now, as I look at my watch, which it's in the morning your time, is they're wondering what to have for lunch because they're on holiday. They're on vacation. It's August in the Northern Hemisphere. So the industry isn't doing much at all. That'll change very abruptly in September, and that's why this sector has a very strong seasonality aspect from September through to the rest of the year, because fuel buyers and other market participants, traders, all the rest of them, they go on holiday or vacation in August, and then they come back in September and they all regroup in London for World Nuclear Association Symposium. The difference is this year they're going to be regrouping and thinking, wow, is that. And having already come from the space of understanding that the wheel has turned and we're now in a deficit environment, we're in a scarcity environment, we're in a need for more diversification, get away from Russia, they're then going to be confronted with working their way through. Potentially by September, we've got more clarity on what's happening in Niger. There'll still be question marks over how much supply can get out of Kazakhstan. they'll be getting their heads around delayed financings of emerging greenfields projects, such as we've talked about. And my anticipation is that that will be a very dynamic week in London as all of the market participants start to game through this. Now, here's the fascinating thing for investors. To answer your question, what a utility fuel buyer is thinking, apart from the fact that they're on vacation, they don't tend to react to speculation. They're not investors. They want to see the evidence. They might be looking at Niger saying, that's really fascinating, that's a dangerous situation, but they won't react until they know. So the Nigerian government has said, as you mentioned before, that they will block uranium exports to France. Okay. The utility fuel buyer, they will say, well, let's wait until we know if the uranium's getting out of there or not. And in any case, if they block it for 2 weeks, even if they block it for a month, it doesn't really make much difference as long as it gets out eventually. Investors, of course, we're trained to react to speculation because that's how we make returns. We make predictions better than the rest of the market, and we make outsized returns in that way. So the real impact of all of this, both the Kazatomprom announcement, Cameco's very bullish commentary from their quarterly, and this situation in Niger is, will it operate to start the investor flows into the physical uranium funds? And that, Matthew, is a good segue into our Moonshots or Fizzers for the week.
Definitely. So what is this going to do for physical uranium funds? Their expectation was that they'd have a massive impact on the market, and they have. Price continues to drive. Forward inventory continues to be mopped up, but they only work in certain trading conditions, right? So what's your view on, say, for instance, Niger on all of, let's say, SPUT, for instance?
So far, what it's done is it has increased interest in the ETFs, and we're seeing flows of funds into the ETFs. Now, that benefits the constituent companies in that index. So Bannerman, the company that I'm with, for example, we're in all 4 of the ETFs. So any money that goes into an ETF, a proportion of that finds its way into the bids on the ASX that move our share price. But some of that also goes directly into SPUT as a constituent holding within those ETFs. Now, also, we're seeing the gap between the NAV discount that's been prevalent for months now with SPUT narrowing. So the Sprott Physical Uranium Trust, over the last several weeks, it's averaged about an 11% discount to net asset value. In other words, you can buy SPUT at 11% cheaper than the underlying uranium at the current spot price that represents. That's now closed to, day before yesterday, it was 5.5%. We've seen Yellowcake close even more to around 3%, for example. So it's starting to get to the conditions where it just needs a little bit of an uptick in investor sentiment. And if SPUT starts trading at a premium, it will issue new units, and it will use those new units to buy uranium in the spot market. And the market is so conditioned to understanding what happens next, which is the spot price. It's very tight out there. The spot price will go up. That'll create more investor interest. That'll create more pressure on SPUT's share price, give them the opportunity to issue new units. They buy more uranium, and so we go again. So that's the question. That's why it's either a moonshot, or it's possible that there's a resolution in Niger, or investors lose interest and it just fizzles out, and we've got to wait until September for the dynamics that I described to catch on. Interestingly, the major consultants in this sector, including UXC, which has traditionally been quite conservative, they're saying quite outwardly these events in Niger will lead to an increase in the uranium price. So the question now is, to what extent are investors going to front-run that by positioning themselves in the likes of SPUT and Yellowcake and some of the other vehicles? And will that start up this spot price increase ahead of everyone understanding the collective impact of all of these dynamics which will probably be in September at the World Nuclear Association Symposium.
And I'll see you there. Brandon. And we've got to, I mean, that's a point well made. You sort of recognize the emotion in investing and the motion in the market in terms of a driver. And even if Niger's situation sorts itself out, there's this nagging doubt will sit in the back of the minds of certain utilities in terms of maybe where they look for their pounds in the future. Look, we better finish off here. Quite a humorous one is there's a tweet of the week. We'll put it up here, but what are we looking at?
So it's a tweet. It's interesting for a couple of reasons. So it's by someone I've never come across before, Johann Christian Solid. If I've got that pronunciation right, apologies if I've mangled it. So what Johann has put up is, and yeah, okay, great, we've got it on the screen now. Biomass is green energy. It's a it's a satirical cartoon, and what's interesting about this is Johann has a couple of thousand followers, and this tweet has gone massively viral. It's had more than 1,326 retweets, thousands of likes. And what that tells me is it's really hit a nerve with people. So we were talking before about intermittent renewables, and the crime of intermittent renewables is not the technology itself, it's the outlandish expectations that lobbyists and other market participants have used to manipulate the collective psyche into expectations that are increasingly apparently just not realistic. That's renewables. In a totally different category is a large proportion of bioenergy, which I'm not going to be the only one saying this, but a lot of people say it's an outright fraud to try and treat biomass, and not all of it, but many of those categories, as a green energy. It's hocus pocus. It's dishonest. To put it in the kindest possible way, it's dishonest. And that's what this tweet captures. And that's why it's been retweeted so many times, because it's capturing an increasing collective conscience.
Yeah, I thought it was hilarious. I mean, I hadn't seen it until we discussed it. But you're right. It's as insane as the thing we talked a couple of weeks ago with a similar tweet and the Scottish government having cut down whatever it was, 15 million trees to build wind farms. What were they thinking? And in this case, this is a sector which we looked at about 10 years ago. Didn't make sense then. It doesn't make sense now. We got to get a grip, boys and girls. It's not about short-term gain. This is about, providing energy to the people at affordable rates so it doesn't paralyze them and affect their lives negatively. So if we can get on with that, dear politicians, that would be much appreciated. Brandon, we better wrap it up there. That's been a kind of good session. Didn't see you last week. You're busy. I also know you put out a note. I saw the note you put out to shareholders. You talk in there about the market has been sort of quiet. It's a very kind of quiet period, as you say. Utility buyers are on holiday or taking a break anyway. The markets are just taking a breather as well. We've seen very, very little effect, I think, on the recent rate increase. I think maybe people are thinking we're at the bottom, feeling like we're at the bottom now. But your note to your shareholders was saying, look, we need some patience in the market. We've talked about it before. I think other CEOs said, look, just need a bit of patience in the market. And you reframed it as strategically patient. What did you mean by that?
Well, it's one thing to be patient, but patience needs to have advantages. And here they're very clear, because we're on a trajectory of further firming, further tension in the market. All of the signs are that uranium prices are going up. All of the signs are increasing demand. Almost every week we've got another story of supply reductions or supply forward expectations decreasing. So that's all fabulous. It's just not reflected in the current price. So patience has a very clear benefit. However, you need to be very careful that patience can also have a cost. And for public companies, that cost can be quite profound. For example, companies who are too patient run out of money every day of the week on the stock exchange. So the note to shareholders was really setting out how we've strategically set the company up to be able to have that patience so that we can enter the market at the time that we think is right without any of those costs. And as you read, Matt, I just outlined the three key factors in maintaining strategic patience. The first one is not having any arbitrary deadlines, not promising anyone that you're going to be in production by a certain point. Yes, you can give guidance, and it's good to give everyone a flavour for it, but we've been careful not to put deadlines and milestones in front of us that we feel compelled to hit. The second one is having the cash. We've got $42.5 million in the bank. Our cash burn's very constrained, and I put some numbers in there. Our quarterly cash burn was a couple of $1 million. So that buys us all of the time that we need to choose the timing ourselves, not be forced by our own cash balance. It also gives us the money to progress what we need to with our engineering so that we can keep the project moving forward, even though we've completed our definitive feasibility study. And then the final thing is not so well understood by most investors, but when you've got a very advanced shovel-ready project like Bannerman's Etango project, it's important that you don't let the engineering go stale. It's important that you don't go out and get a whole lot of prices on your construction cost, on your equipment and everything else, and then just let those prices sit and go out of date. And so I talked in the note about the really clever things that we've been doing with Wood PLC, our lead engineers, and also Gavin Chamberlain, who's our amazing Chief Operating Officer, who you've met. The steps that we've taken to make sure that we're absolutely optimizing that and we're not falling into any traps of letting that engineering go stale or otherwise letting those numbers start to become questionable. So we're doing that really well, and so that gives us that patience. Everything that's within our control, we're controlling well, and we're progressing, and we're happy with. And the thing that's outside of our control, which is how quickly this market adjusts to the very obvious positive dynamics, well, we'll wait and we'll be patient, and there's no cost to the business of doing that because of the strategic steps that we've taken.